Warren Buffett, one of the most successful investors of all time, has a knack for distilling complex financial wisdom into simple, memorable sayings. Among his many aphorisms, the phrase, "Only when the tide goes out do you discover who's been swimming naked," stands out for its vivid imagery and profound meaning, especially in the context of financial markets and business strategy. When Buffett refers to the tide, he is alluding to favorable economic conditions or bull markets. During such times, there's generally an upward movement in stock prices, increasing corporate profits and optimistic economic projections. Many businesses thrive during these periods, even if they are not fundamentally strong. Just as high tide conceals what's beneath the water's surface, a booming economy can mask the underlying weaknesses of certain businesses and investments. By swimming naked, Buffett metaphorically points to companies and sometimes investors that aren't prepared for downturns. These are entities that might be overly leveraged, lacking in real substance or competitive advantage, or perhaps are simply in industries that are not sustainable in the long run. In the context of the euphoria that often accompanies booming economies, these vulnerabilities can be easily overlooked, both by the market and by the businesses themselves. The revealing moment, the receding tide, is the economic downturn or bear market. This is when businesses and investments are truly tested. Those without a strong foundation, or those swimming naked, are exposed and often suffer the most. The downturn strips away the illusion created by the good times, revealing which companies have genuine staying power and which were merely buoyed by favorable conditions. Buffett's saying is a cautionary one. For investors, it's a reminder to look beyond surface-level performance and to deeply analyze the fundamental strength of any potential investment. It's not enough for a company to be doing well during good times. The true test is whether it can weather the bad times. For business leaders, the message is about resilience and preparation. Building a strong balance sheet, establishing a sustainable competitive advantage, and avoiding excessive debt are all crucial strategies to ensure that when the tide inevitably goes out, the business remains standing. Economic cycles are inevitable. While their exact timing and magnitude can't always be predicted, the pattern of boom and bust is as old as commerce itself. Buffett's words are a reminder of this pattern and the need to always be prepared for both the good times and the bad. In conclusion, Warren Buffett's adage, "Only when the tide goes out do you discover who's been swimming naked," is a potent metaphor that underscores the need for prudence, preparation, and discernment in the world of investing and business. It's a timeless piece of wisdom that stresses the importance of looking beyond the immediate and preparing for the unforeseen, ensuring that one is not caught off guard when the economic landscape shifts.